So understanding your financial statements, they're essentially made up of three things: your profit and loss statement, your balance sheet, and your statement of cash flow. That's usually what your financial statements will be made up of. Your profit and loss statement will show everything that you earn, all of your income that you earn, less any of the expenses that you've incurred to earn that. And I'm going to take you through, and if you're at the back, you might be better looking at the screen beside you because they're going to get quite small numbers. This is a real live building company that's come across my desk in the last couple of months. They started at 1.9 mil and they've gone really big really quickly, up to 4.4 mil of income. But they've had to incur a whole lot more expenses in that time as well. So they've incurred almost 300 grand of advertising in that period. They've had to engage a whole lot more subcontractors to do that, and they've had to probably buy or lease motor vehicles to get to those sites. What that's led to though is their profit margin going from 44% down to 4%. That's a massive drop in a 12-month period. I was presenting this same content up at Toowoomba a couple of weeks ago, and a fencing contractor came up to me after the event and he said, what should my profit margin be as a fencing contractor in Toowoomba? And I said, geez, that's a really difficult question to ask, or difficult question to answer, I should say. Industry experts would say your profit margin in the building industry should be about 20%. 8 to 12 is probably average. However, you're looking at someone like, and they're publicly listed, it's information that's available, they run on a 1 to 2% profit margin. I'm pretty sure that fencing contractor in Toowoomba couldn't run off a profit margin of that. However, turnover $3 to $4 billion. And I didn't ask the young fellow what he's turning over, but I don't think it'd be 3 to 4 billion. So when you're looking at that kind of profit margin, it's really helpful if you can compare fencing contractors in Toowoomba against other fencing contractors in Toowoomba. There's no point even comparing a fencing contractor in Toowoomba to a fencing contractor on the Gold Coast. You've got completely different margins. The ATO does have a web address that is available. I'm happy to hand it out later, and it will give you, if you're a painter on the Gold Coast, it should tell you your average profit margin that you should be capturing. But don't try and compare the average margin or average margin, because you are going to get captured alongside. It's a completely different market. So what does your balance sheet show you? Essentially, it's broken up to current assets and non-current assets. So your current assets are things you can turn into cash quite quickly. Your non-current assets are things that you're holding on to long-term, motor vehicles, property, plant and equipment, things like that. Your current liabilities and your non-current liabilities, things you need to pay quickly, and things that are long-term, like your mortgage or leases on your vehicles. And this one is really quite hard to see, so down the back it might be easier to see at the side. But essentially this is that same company that went from 1.9 to 4.4 in that income. So they've got a whole lot more work in progress out on site. They've got a whole lot more debtors that are invoiced but not yet paid. On the flip side of that, they've now got a tax debt. They have probably got the bank overdraft to pay for that plant and equipment that they need, and their motor vehicles are on lease. So their current ratio is out. They don't have enough current assets to pay their current liabilities. Probably at some stage they may get into grief with their subcontractors and suppliers because they don't have enough cash in their pocket. And they've gone from almost $500,000 in a positive position to a negative 62. And that negative 62 is not massive, but if they don't turn that around fairly quickly, it's going to keep diving into their profit margin and probably going to go further south. What your statement of cash flow will show, this is essentially what your lender or your banks will pick up first. It will show what cash is coming in and what cash is going out. So same as any industry, cash is king. If someone's going to lend you money, they will look at your cash and they will look at that through your statement of cash flow.